Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, October 31st, 2025, and here is everything you need to know as the markets close for today. Well, folks, we've wrapped up a challenging session for Indian equities as the week comes to a close. The benchmark Sensex took a hit, closing at 83,939, down 466 points, representing a decline of 0.55%. Our broader Nifty 50 index ended at 25,722, dropping 156 points, or 0.6%. The Bank Nifty, reflecting broader banking sector weakness, closed at 57,776, also in red territory. This marks the second consecutive day of losses for our headline indices, as investors opted for profit booking after a robust monthly rally in October that saw both indices gain approximately 5%, their best monthly performance since March. The dominant theme today was risk-off sentiment amid cautious global cues. The rupee showed resilience, closing around 88.72 against the dollar, maintaining relative stability despite the firmer US dollar globally. The Indian currency has been trading near these levels consistently this week, providing some insulation to our export-oriented sectors, though the stronger greenback did weigh on overall commodity demand. Now let's spotlight the day's major movers. On the bullish side, we saw strong performance from defense and PSU stocks. Bharat Electronics, or BEL, emerged as a standout gainer, surging nearly 4% to close around 414 rupees, riding high on stellar Q2 results, showing revenue growth of 26% and net profit expansion of 18% year-on-year. The company also released a record order book of over 74,000 crores. Shriram Finance powered higher by approximately 1.96%, while Eicher Motors gained 1.92%, both supported by robust quarterly earnings. In the PSU banking space, Union Bank of India rallied over 4%, Canara Bank jumped 3%, and Punjab National Bank climbed 2.3%, all riding on a significant boost from SEBI's new framework for Bank Nifty. On the flip side, selling pressure hit across multiple names. Eternal led the losers, plummeting 3.45% to 318 rupees, followed by NTPC dropping 2.52% and Cipla sliding 2.51%, all posting losses despite Q2 results. The energy major NTPC, despite reporting a 3% rise in net profit to 5,225 crores, couldn't escape the broader selling wave. From a technical standpoint, Nifty 50 held crucial support around 25,700, which contained most of today's intraday selling pressure. The index did dip to a low of 25,711 during the session, but recovered from there. Immediate resistance now sits around 25,920 to 25,970. For the Nifty to turn decisively bullish and break toward 26,100, it needs to convincingly clear this 25,970 resistance zone. Bank Nifty similarly faced support around 57,500 levels, which it held today. The PSU Bank Index emerged as today's top sectoral performer, rallying nearly 1.5%, driven by SEBI's structural reforms to Bank Nifty. However, this came at the expense of private banks, which saw selling. The Nifty Financial Services and Nifty Metal indices bled the most, with media shares also declining around 1.32%. Power stocks and select industrials faced headwinds amid profit-taking. The most significant development today was SEBI's announcement of new prudential norms for Bank Nifty derivatives. The regulator mandated that Bank Nifty must now comprise a minimum of 14 constituents, up from the current 12. Crucially, the weight of the top constituent is now capped at 20%, down from 33% previously. The combined weight of the top three constituents cannot exceed 45%, compared to the current 62%. These changes will be implemented in 4 tranches, concluding by March 31, 2026. This framework sparked anticipation for potential new entrants, with Yes Bank, Indian Bank, Union Bank of India, and Bank of India flagged as possible additions to the index. The move is primarily aimed at reducing concentration risk and ensuring better diversification in derivatives trading, thereby protecting retail investors from undue exposure to a handful of heavyweights. On the commodity front, gold prices weakened on MCX today, with December contracts trading lower by 0.25 to 0.34%. Gold closed around 121,000 rupees per 10 grams, pressured by a firmer US dollar and higher bond yields, which reduced investment appeal. Silver futures also declined by over 0.5%, trading around 148,000 rupees per kilogram on the MCX. In the energy complex, crude oil continued its third monthly decline. Brent crude slipped to $63.97 per barrel, down 0.62%, while WTI fell to $60.33 per barrel. The downward pressure on commodities reflected a stronger dollar following the Federal Reserve's cautious remarks on December rate cuts. Globally, sentiment remained subdued after the U.S. Federal Reserve suggested uncertainty over a December rate cut, pushing risk assets lower worldwide. The U.S.-China trade tensions saw a temporary one-year truce agreed, with the U.S. cutting the fentanyl tariff from 20% to 10% and extending a pause on reciprocal tariffs, while China agreed to resume soybean purchases and rare earth exports. Though this reduces near-term trade war anxieties, core disputes remain unresolved, leaving underlying tensions intact. This geopolitical caution, coupled with the Fed's hawkish tilt, dampened global equity momentum and flowed into our market. Looking ahead to Monday's session, the Nifty faces a critical juncture. If the index remains below 26,000, we could see consolidation continue with key support at 25,800 to 25,700, followed by a crucial support zone around 25,500. However, a decisive break above 26,000 could trigger a fresh leg upward, potentially opening the door toward 26,100 to 26,300, which represents prior resistance. The Bank Nifty too will likely mirror this consolidation unless we see a broad market recovery. The broader Nifty 50 has formed a bearish candle pattern on the daily chart, with the RSI showing a bearish crossover near the 64 level, and the stochastic RSI also signaling weakness. However, the index continues to trade above key moving averages, maintaining an overall positive structure. Momentum indicators suggest caution in the near term, even as the longer-term bias remains constructive. Here's what you should watch for Monday. If you're trading options or derivatives on Bank Nifty, keep SEBI's new framework front and center. The weight rebalancing will trigger significant portfolio reflows into PSU banks and away from private bank heavyweights, particularly HDFC Bank and ICICI Bank. This could create trading opportunities in PSU banking counters like Union Bank and Bank of India, which may see inflows ahead of formal index inclusion. On the Nifty side, use any dips toward 25,700 to add quality names. The medium-term structure remains solid despite today's weakness. Watch out for Monday's open for any global carry-through. If we see strength in Asian markets, the Nifty could attempt the 26,000 level. Don't forget to send in your questions, and tune in tomorrow morning for our market wrap to catch all the opening action and intraday triggers. Stay tuned for tomorrow morning's wrap and send in your questions. This is Prem signing off. Have a great evening, and we'll see you bright and early on Monday.